Hello everyone, welcome back to my channel. In recent headlines, there have been numerous discussions about the Central Bank of Iraq, CBI, the Federal Reserve, Feds, and the US Treasury. At first glance, these headlines might seem alarming, suggesting that things are looking quite grim for Iraq's financial situation. However, it's essential to understand the broader context and the underlying intentions behind these actions. Rather than causing panic, these developments should be seen as very positive news for us as investors. The recent moves by the US Treasury are strategically designed to support the currency reform process in Iraq, paving the way for significant advancements once these current issues are addressed. To begin with, let's unpack the roles of the CBI, the Feds, and the US Treasury. The CBI is responsible for the monetary policy of Iraq, managing the country's currency, and ensuring economic stability. The Federal Reserve, or the Feds, is the central banking system of the United States, which influences global financial markets. Meanwhile, the U.S. Treasury is a critical government department responsible for managing federal finances, including producing currency and implementing economic sanctions. Recently, the U.S. Treasury has taken steps that might seem detrimental at first glance. These actions have included stringent measures and regulations aimed at tightening the control over financial transactions involving Iraq. These steps were necessary to address significant issues such as money laundering, corruption, and financial mismanagement, which have plagued Iraq's economy for years. While these measures might create short-term challenges, they are crucial for ensuring a stable and transparent financial system in the long run. The primary objective of these recent actions by the U.S. Treasury is to aid the currency reform process in Iraq. Currency reform is a complex and multifaceted endeavor, aiming to stabilize the Iraqi dinar, improve its value, and integrate Iraq more seamlessly into the global economy. By addressing the underlying issues of financial malpractice, the U.S. Treasury is effectively clearing the path for these reforms to take place. For investors like us, these developments should be seen as a positive indicator. The U.S. Treasury's involvement signifies a serious commitment to rectifying the financial irregularities that have hindered Iraq's economic growth. Once these issues are resolved, Iraq will be in a much stronger position to proceed with its currency reform plans. This could potentially lead to a more stable and valuable Iraqi dinar, benefiting investors who have put their faith in Iraq's economic future. Furthermore, this collaboration between the CBI, the Feds, and the U.S. Treasury underscores the importance of international cooperation in achieving economic stability. By working together, these institutions are striving to create a more transparent and robust financial system in Iraq. This cooperation is not just beneficial for Iraq, but also for the global economy, as a stable Iraq contributes to regional stability and economic growth. In summary, while the headlines might initially seem alarming, they represent a necessary phase in the journey toward a reformed and stronger Iraqi economy. The recent actions by the U.S. Treasury in coordination with the CBI and the Feds are aimed at tackling deep-rooted financial issues and setting the stage for meaningful currency reforms. For us as investors, this is indeed very good news. It indicates that significant progress is being made, and once these issues are resolved, we can expect a more stable and promising investment environment in Iraq. So instead of panicking, let's remain optimistic and recognize the potential long-term benefits of these crucial steps being taken today.